Ladies and gentlemen, good day and welcome to the Q4FY22 earnings conference call of Indoco Remedies, hosted by Centrum Broking Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Arundhati Kursange from Centrum Broking. Thank you, and over to you, ma'am.
Good afternoon, everyone. I, Arundhati Kursange from the Corporate Access team, welcome you all on behalf of Centrum Broking on Q4 earnings con call of Indoco Remedies Limited. At the outset, I thank the management of Indoco Remedies for giving us this opportunity to hold the earnings call. From the management team today, we have with us Ms. Aditi Panandikar, Managing Director, Mr. Sandeep Bambulkar, Joint Managing Director, Mr. Pramod Ghorpade, CFO, Mr. Vilas Nagre, Corporate Affairs and M&A. I now hand over the call to the management team for their opening remarks. Over to you, Ms. Aditi Panandikar, Managing Director.
Thank you, Arundhati, and thank you everyone for joining us. Today we are happy to report that for Indoco, the fourth quarter and the year 2021-22 has been highly successful. For the quarter, we have reported an impressive sales growth of 35.8%, and for the year, the sales growth is at 23.4%. Our earnings per share has gone up significantly by 67% from rupees 10.03 per share to rupees 16.77 per share. This performance is exceptional, especially on the backdrop of supply chain disruptions, rising input costs and worrying inflation. What has helped us register this notable growth is our diversified business portfolio and market presence across geographies. In the domestic business, we have grown by 38.5% for the quarter and by 29.7% for the year, keeping the growth momentum consistent throughout the year. As a result, our ranking in the IPM has improved. We will now focus on improving our market share and shall register high growth numbers in our covered market. Our US strategy is shaping well with new product launches and a robust pipeline. In this quarter, we received 3 ANDA approvals, including lacosamide tablets, which we got on the day of patent expiry, and lacosamide injection, for which we were the first generic. As many of you might be aware, Indoco will be completing 75 years of existence on the 23rd of August this year. And in this milestone year, Indocoites are fully charged to enter a new orbit and benchmark with the best in the industry. At Indoco, we are currently undergoing a super transformational journey in IT as we implement SAP HANA, data management, document management systems, Ariba, etc. I'm confident that going forward, we will continue to excel and display consistent performances, irrespective of the challenges in front of us. That's all from me for now. I will answer your specific questions and now turn the call over to Mr. Sandeep Bambulkar to give you the financial details on the fourth quarter and the full year.
Thank you, Aditi. Good afternoon, all the participants. Hope you and your family members are all safe and healthy. Let me first begin with the business highlights. Net revenues of the company grew by 35.8% at rupees 400.3 crores compared to 12% at rupees 294.8 crores for the same quarter last year. For the year ended, revenues grew by 23.4% at rupees 1,502.7 crores as against rupees 1,217.4 crores. EBITDA to net sales for the quarter is 20.1% at rupees 80.5 crores compared to 18.5% at rupees 54.6 crores. EBITDA to net sales for the year is at 21.8% at rupees 327 crores compared to 18.4% at rupees 223.6 crores. Profit after tax to net sales for the quarter is 10.1% at rupees 40.4 crores compared to 8.4% at rupees 24.9 crores. PAT to net sales for the year ended is 10.3% at rupees 154.5 crores compared to 7.6% at rupees 92.4 crores as of last year. Domestic formulation business. Revenues from domestic formulation business for the quarter grew by 38.5% at rupees 192.9 crores as against rupees 139.2 crores for the same quarter last year. Major therapeutic segments, namely respiratory, cardiac and anti-infectives, did well during the quarter. For the year, revenues grew by 29.7% at rupees 803.1 crore against rupees 619 crore. During the quarter, two new products were launched, namely Subitral 50 mg capsules and Subitral DS 100 mg capsules. The molecule is itraconazole. Under dermatology segment, the total number of new products stands at 6 for the year. Now on the international business front, revenues from international business registered a growth of 43.8% at rupees 189.5 crore as against rupees 131.8 crore for the same quarter last year. For the year, revenues grew by 26% at rupees 620.5 crores as against rupees 492.3 crores. Revenues from regulated markets for the quarter grew by 47.6% at rupees 155.2 crore as against rupees 105.1 crore. For the year, revenues grew by 25.9% at rupees 503 crore as against rupees 399.8 crore. Revenues from US business for the quarter grew by 110.3% at rupees 69.6 crore as against rupees 33.1 crore for the same quarter last year. For the year, revenues grew by 43.5% at rupees 212.7 crore as against rupees 148.2 crore. Revenues from Europe for the quarter grew by 14.7% at rupees 79.7 crore against rupees 69.5 crore, and for the year, revenues grew by 14% at rupees 272.8 crore against rupees 239.4 crore. Revenues from South Africa, Australia, New Zealand for the quarter were at 5.9 crore against rupees 2.5 crore for the same quarter last year, and for the year, it was 18 crore against 12.2 crore. Revenues from emerging markets for the quarter grew by 28.7% at rupees 34.3 crore as against rupees 26.7 crore for the same quarter last year. And for the year, revenues grew by 26.4% at rupees 117 crore against rupees 92.5 crore. Revenues from API business for the quarter were at 13.1 crore against rupees 19 crore for the same quarter last year, and for the year ended March 22, API business recorded sales of 63.4 crore against rupees 94 crore. This is mainly due to higher captive consumption, approximately 54% of total sales. Revenues from CRO and analytical services for the quarter were at 4.8 crore against rupees 3.8 crore, and for the year, revenues grew by 29.9% at rupees 15.7 crore against rupees 12.1 crore of last year. That's all about the business highlights for the year, and I now request the participants to put up their questions.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Aditya Khemka from InCred AMC. Please go ahead.
Yeah, hi. Thanks for the opportunity. I have a few questions on the domestic business. Aditi ma'am, what would be the total sales related to COVID that we did in FY22? I'm assuming these would be non-recurring sales. So just wanted to understand the COVID-related sales in FY22.
Yeah. So, Aditya, for us, we didn't, most of our products were sort of not exactly only for COVID, but they were specifically in anti-infectives and respiratory. These are the kind of products which indirectly also got an impact of COVID-related, of COVID happening and increased consumption. So it is very difficult to exactly pinpoint for products. But if I have to give you understanding, basically we got the COVID tailwinds for 3 brands. One was Carvol Plus, second is ATM, and the third marginally is Oxipod, which is cefpodoxime. But that was more of recovery of market over the previous year where the product had dipped. So frankly, it's just about Carvol Plus and ATM. And I estimate around 30 crores of top line for the India business. An upside has come because of COVID. However, both these brands show a solid support of prescriptions. So it is not the kind of sale that has come from over-the-counter purchase because of COVID. It is a solid sale backed by secondaries and prescriptions from doctors. And in case of ATM, for example, we are now the third largest azithromycin brand. And I feel confident that this advantage we got during COVID, we will be able to push it further. Coming to Carvol Plus is a kind of product which has a high repeat purchase element attached to it, and COVID helped us get more of that. So to that extent, possibly the additional sales we got from Carvol is what we stand to not get in the current year.
Understood. So in your assessment, it's about 30 crores, and some of it may stick because prescription seems to be picking up.
Yes.
Okay, understood. And ma'am, I just wanted to understand on the prices. So in April, we must have taken the price increase as for the price controlled products and some of the non-price controlled products. So if you could lay out the, how much of a price increase have we taken in products under DPCO, and how much of a price increase have you already taken and planning to take in the non-controlled basket?
Aditya, overall we have taken, for the organization, we will get a price rise of about 6%.
6%.
For controlled products, we have taken 10.73 as allowed by the government, and for the rest of the products as per the competition, 4 to 5%.
4 to 5% for the rest of the products. Okay.
Yeah.
And your NLEM portfolio is about 20% of your sales?
No, 11%.
11%. Okay. So NLEM portfolio is 11. Okay. So 6%. And lastly, on the domestic business, ma'am, how do you see now on this base, because you have, let's say, 30 crores of non-recurring sales of COVID. So your base would actually be 770 and not really 800. And how would you really grow on the base of 800 in FY23? And what would drive that growth? So 6% would come probably by price. What is the volume and new production?
Yeah. Interesting question, Aditya. And quite honestly, the way this year is going to plan out, because last year was a COVID year where performance fluctuated so heavily month over month and quarter over quarter. This year, in order to benchmark a healthy performance for India business, we would be concentrating on our market share in the covered market, which will be a much better barometer to assess how we are doing. Because the covered market itself is expected, covered market as well as the Indian pharma market is expected to, growth would not be a correct way of assessing health of the business in this year. So I'm pretty confident, this year, all said and done over the last 2 years, it is not just a COVID basket, but products across most therapies for Q4 have done exceedingly well. And I feel we will be able to get a higher market share going ahead. We stay concentrated on prescription generation, secondaries, and pushing products across various therapy baskets. As you know, the two main therapies which got support from COVID were anti-infectives and respiratory. But other than that, GI and stoma absolutely did not get touched in any way, neither when COVID happened and nor afterwards. So there we have a very steady stream business which is growing at double digit. This year I'm expecting the dental and the gynac and ophthalm portfolios, which were impacted last year, to start doing better, as well as the chronic therapy. Although we have a small percentage share in it, I expect it will grow at much higher levels. So we will expect muted growth from the two acute divisions, higher double-digit growth from all the other divisions. That's how we are looking at.
Understood. So, ma'am, in your assessment, in the full year of FY23, even IPM can see flat volumes?
It looks like that as of now. Like I said, it's going to be different month to month. So if you look at the last year and see April and May, which were when a wave happened, and then again Jan and Feb when a wave happened, so you would have to, it's very difficult to make a generalized statement about the IPM. But for the whole year, I think even IPM will correct and come back to its higher single-digit growth at least.
Understood, ma'am. That's helpful. One last question. This is probably for Vilas, sir. Your gross margins, Vilas, for this quarter obviously were impacted by raw material inflation. I haven't seen 68% gross margins for Indoco for a long time. So how do we feel about it, despite the price increase that we might be able to take in India and semi-regulated markets? Will we be able to go back to our 70% plus gross margins?
Aditya, a lot of the, I know it's for Vilas, but I hope I can answer. Some of the headwinds, specifically which impacted cost of goods, and therefore impacted our GCs. There is no certainty about them, to be very honest. We expect, based on certain discussion internally and looking at the environment, that at least for another quarter, if not one more, we are likely to be impacted with higher cost of goods.
Understood. Thank you, ma'am. I'll get back in the queue.
Thank you. The next question is from the line of Ravi Naredi from Naredi Investment. Please go ahead.
Aditi ma'am, thank you very much for nice result. You and your team is doing fantastic job. We give best wishes for future. Ma'am, our request is one investor presentation. If you give along with the result, it will helpful for us to understand the company in more better way, as I am new investor in the company. That is my request.
Okay, so we typically send out a management discussion analysis. If it has not come to you this time, I request you to get in touch, or we will know your details through the contact, and we will ensure that you get it next time.
Okay, ma'am. Thank you very much.
Possibly we could send it to you tomorrow itself.
Okay, ma'am. But it will be before the con call. It will be more better, so we can see date and then ask the question according to highlight.
MD has gone out at around 1:45 today. So I don't know why you have not got it, but we will ensure.
Your email is not registered with us. Please send your email and then we will make sure that it is sent to you.
Okay. Thank you.
Thank you. The next question is from the line of Dhara Patwa from Smiths Limited. Please go ahead.
Yeah. Hi. Thanks for the opportunity. Ma'am, I just had two questions. Can you give me the Capex guidance for FY23 and FY24?
Yeah. Any other questions from your side, or that's the only one?
No, I also wanted to know about the ophthalmic product portfolio, the new launches in the next 2 years for that.
Okay. So Capex, this year we are guiding somewhere between 110 to 120 crore.
Okay.
First part of your question.
So this will be mainly maintenance Capex?
No. maintenance Capex, plus we are putting up fresh lines in our ophthalmic plant. So all put together, I'm talking of around 120 crores.
Okay. And any color on the ophthalmic product portfolio? How do you see to pan out in the next 2 years?
We have many ophthalmics coming up in the next 2 years. First is a product in partnership with Teva. Second is a steroid in combination with an antibiotic in partnership with another company. So ophthalmics, is one of our strengths. So we will be launching at least 5 to 6 new ophthalmics in the next 1.5 to 2 years.
Okay, that's. I had one more question. There are 2 FDA filings which you are pursuing. Can you share any details over there? How do you see the market competition and market size of these products?
You're referring to solid dosages?
Yes.
We are not really at liberties at this stage to discuss, since I think you understand that it's a strategic advantage being an FTA.
Yeah, sure. Okay, sure. That's it. Thank you.
Thank you. The next question is from the line of Deepan Shankar from Trendline PMS. Please go ahead.
Good evening, everyone, and thanks a lot for the opportunity, and congratulations for good set of numbers. So firstly, Aditi ma'am, wanted to understand, has our revenue per salesperson has increased, and what is our outlook for over next 2 years in this category?
Yeah, so our PCPM or PHY per man return is now at 3.3 lakhs. Okay. And in the next 2 years, I expect it to get to around very close to 4.
Okay.
What was the second question? I'm sorry.
Yeah, can you provide the outlook for our US and Europe business for next year?
US business is slated to grow by about 40% by the end of the year, and Europe business, which includes the mainland Europe and UK, will grow by about 20%.
Okay. Thank you and all the best.
Thank you. Before we take the next question, a reminder to the participants. Anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Rahul Veera from Abacus. Please go ahead.
Hi, Vilas sir. Just wanted to understand if there is any profit share number in this quarter?
Profit share, yes.
What is the number, sir?
Okay, so
For this quarter.
Okay. Profit share for this quarter is 4 crore. While we have a dossier income of about 18 crore in this particular quarter.
I got that.
Yeah, and just one more question from my side. In all the other launches that we are doing with Teva and any other partner over the next 2 years, is the profit share arrangement increasing?
Sorry, last part we did not hear properly.
Is the profit share number, is it on an increment, is it increasing from whatever we did for the first product, something like a brinzolamide? Now for the new launches, are we increasing the profit share?
Yeah, generally speaking, yes, it's increasing. However, product to product, it is different, the arrangement based on the upfront investment that each of us has had to do. I hope you get it, because there are some products with, say, clinical trial-related expenses, so there our share would be lower. But in most other vanilla products, solutions, suspensions, it's increased.
Right. And we have a couple of contracts in Europe, specifically from the Germany side. Given the current situation across Europe, is the delivery or everything is on FOB basis or CIF basis? Just trying to understand, are we taking the logistical cost on our books, or how does it work now?
As a policy, we are ex-works.
Ex-works. Okay. Fair point, sir. Any new contracts coming across, sir?
New contract, sorry?
We can't hear you very clearly. Maybe you can be a little louder.
Sure. Is there any new contract that we foresee across Germany or Europe or any other region?
So the present contract continues right up to May 23.
Okay.
But order book with both Europe as well as US is very robust as of now.
Absolutely.
Sure. And the UK contract was largely related to paracetamol, right?
No, there are many products, paracetamol, cetirizine, and there are at least 12 to 14 other products in UK.
Right. That's fine, sir. This is helpful. Thank you.
Yeah.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. The next question is from the line of Vishal Manchanda from Nirmal Bang. Please go ahead.
Thanks for the opportunity. Sir, I missed your Europe and US numbers. Can you please share that?
Yeah, US we have said we will grow by 40% and Europe by 20%.
Sir, I'm sorry, I mean the FY22 or Q4FY22 US and Europe numbers.
Present numbers.
Okay, that slide had remained, I think, and was sent later.
Okay, US for the quarter is about 70 crores. Can you hear me? And Europe was about 80 crores.
Europe was 80 crores. Okay. And sir, one question related to Capex. So this year the Capex was around 125 crores. Can you share on kind of what was the Capex spent on, and could we see some benefit out of it in FY23?
Yeah, one part of Capex was installing a new line in the sterile block, that's Goa plant 2. And that line has been installed and commissioned. And it will be definitely helpful in a big way. The line will start operating from around 20th of June, that is next month. And we'll get benefit for right from 20th June onwards, right up to March 23. That's for the current year, if you're talking about.
Okay.
That is one. Secondly, we have built a block for high potency products which cannot be manufactured in a general area. And there are substantially large contracts being signed in Europe for this product. And Indoco will be one among very, very few companies to have such kind of a segregated manufacturing.
This is for solid orals.
Solid orals. Thirdly, we have also got within that block another block which manufactures sustained release tablets and capsules. So that also will be to our big advantage. So like this, there are 3 to 4 pieces which will give us huge advantage starting from July onwards.
Got it. So we can, so these would be commercialized and start delivering revenues in FY23.
Yes, definitely.
Got it, sir. And just one on India. Can you share what was the contribution of new products in the year FY22 as a percentage of revenue?
Yeah, around 2%.
Okay. And kind of, can we expect a similar run rate in FY23?
We'll do better on new launches going forward. Most of these products were launched in the second half of the year, so we've not got the full upside.
Okay. And just one on Combigan. So this product expired recently in the US, and it's one of the large ophthalmic products there. So could you share whether whether Indoco can come into this product soon or not?
Yeah. There was some information request received from FDA which we have just answered. And we are aware it's a $490 million market, and Indoco will be the second generic possibly. So, of course, we are hoping to launch as fast as possible. That's all that I can say for the time being.
And sir, the information request was there were no grave issues in that information request.
No.
Got it. So any timelines that you can share, maybe this quarter or the next quarter?
To be safe, I think the product will be available in July in the US market.
Okay. Thank you very much, sir. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one. The next question is from the line of Kunal from Valum India. Please go ahead.
So thank you very much for the opportunity. I wanted to know firstly, could you please tell us the entire, for FY22, the entire profit share accounted for this year, including the dossier income?
Hello. Yeah, Kunal.
Yeah.
So basically, accounting of a profit share is on a receipt basis. We are a little bit conservative in terms of accounting profit share because there is a complete process in place in terms of getting a reconciled statement of a profit share. When an ultimate sale happens in US market, the working is shared with us. We review that and then only we account that. So we can assume that certain portion of profit share which got accounted will come into a next year also.
Okay, so you're saying that based on the conservative method which we use in accounting for the profit share, a part of it where we have supplied the inventory, but a part of the sale is which is not yet accounted will come in the next.
Yes.
Okay. And just I wanted to understand. So, could you please explain the method? Based on how the innovator, actually, remits the profit share to us. Any just rough method as to, whether it is based on you reaching the product in a certain market share threshold, or because for most companies, what we see is that once a product becomes mainstream for the front end partner, and once a decent amount of share builds up. It is more or less, on a quarterly basis where the profit share accounting does happen, for your peers. So can you give us an understanding of the method?
So, frankly for us, we are yet to get a consistent sale of any such product with Teva. So let us watch this year. I'm expecting a similar pattern to happen.
Okay. And ma'am, could you please let us know what is the closing market share as of the end of this quarter for brinzolamide for our generics?
It must be around 5 to 7% right now.
Okay. Because ma'am, sir, in the past I think quarter call, I think what we had conveyed was that we are about to, somewhere closer to 20%. So, is some inconsistency in that thing? So could you ratify?
Yeah. Now again, it will go up. So by July, we should regain that position of 20%.
Okay. Is there any reason for the share to dip so sharply in a matter of 1 quarter in something?
There was some improvement in the packaging, which was required, and therefore there was a lull in between in manufacturing. But manufacturing has started again, and stock is under transfer.
Sure. So what you're saying is that going ahead as we gain back the market share and probably even exceed that number, which 20% number, we see a higher accounting for profit share going ahead in the next FY20, possibly based on the presumptions which we are having today.
True.
Sure. Thank you very much.
Thank you. The next question is from the line of Dinesh Kotecha from KRIC. Please go ahead.
Good afternoon, ma'am, and good afternoon, sir. I'm Dinesh Kotecha from KRIC. Sir, I have got a accounting question. That is, the R&D expense has gone up by 25% year-on-year basis. And in this quarter, it is nearly 20 crores. So I would like to know, how much is the capitalized amount of the R&D? Because what you are showing in the profit and loss account is the revenue item of the R&D.
Yeah. See, we have a fixed policy that only when it is our own ANDAs, we capitalize the outgo. And as soon as the approval comes, we write it off in a period of 3 years. That is a constant policy. Now, Pramod will just give you the further details.
No, but how many products have been capitalized from the R&D, commercialized from the R&D in the current year?
So your question is about overall amount which is capitalized on account of R&D projects. Is that
And how many products from the R&D have been commercialized during the year?
how many products?
Commercialized during the year.
Yes.
I think around six products launched during the year, you can say.
How many?
Six.
Okay. And how many are in the pipeline right now in the R&D?
If you want to know our ANDA pipeline, then we have around six to be filed in the current year. Every year, we have the trend rate that we would like to maintain.
Okay. Thank you very much. Wish you all the best.
Yeah.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and one. The next question is from the line of Kunal Dhamesha from Macquarie. Please go ahead.
Hi, thank you for taking my question. So the first question is on the three lines, new lines that we talked about, one on the injectable, one on the high potency, and then one another. How much Capex or gross block would we have for these three lines?
The injectable line and the two solid dosage lines put together, about 55 to 60 crores.
Okay, 55 to 60 crores. And all these lines are inspected by the respective regulatory agencies for us to basically start firing on revenue?
Not yet. As and when the regulatory agencies come down, they will be inspecting the line. We are ready for the inspection.
And these are more US and Europe focused, right? Or
Yes.
just US focused?
The ophthalmic is US focused and the solid dosages are Europe focused.
Okay, sure. Yeah, thank you.
Thank you. The next question is from the line of Hiten Boricha from Jointray Capital. Please go ahead.
Hello. Hello. Am I audible?
Yes, sir. Please proceed with your question.
Oh, yeah. So thank you. Thank you for the opportunity, sir. So most of the questions have been answered. I just want one clarification. You mentioned we did 800 crore revenue in domestic market, and it would be grow by 20. We will be growing it by 20%. Is that correct? Or
No. I think you're a little confused. In the beginning, there was a discussion in what percent of the 800 crore we did this year is likely to be additionally on account of COVID, to which we said that around 30 CR is the worst case. I mean, or less than that. Okay?
Okay.
India business this year is looking to grow anywhere between 12 to 15% because we are coming out at the back of a very difficult year. Because a lot of the acute portfolios directly and indirectly got impacted by the various waves of COVID. So we have to wait and watch to see the consumption pattern this year.
okay, ma'am. Yeah, that was the only question, ma'am. Thank you so much.
Thank you. The next question is from the line of Aditya Khemka from InCred AMC. Please go ahead.
Yeah, hi. Thanks for the follow-up. Sandeep sir, just like we are able to increase prices in the domestic market, are we also able to increase prices in Europe and semi-regulated markets to pass on the cost pressure to our customers?
Yes. In fact, in Europe, we have definitely increased the prices to offset the higher input costs, as also in our ROW markets. Of course, looking at the competition because we are marketing our own brands over there. But the whole process is on, and in some territories, we already got the price rise.
Right. And what about the US market and API segment, sir?
US market, we haven't seen any such pressure because mostly, we are in niche areas of ophthalmic injectables. Out of 15 of our products are in ophthalmics and injectables, and the remaining 4 to 5 are solid dosages. So I think there's no problem over there.
Regarding
But the data suggests...
Yeah,
Sorry.
No.
No, I was just adding one point to Sandeep sir's argument. The data from IMS suggests that there is actually inflation in sterile injectable products in the US. And I know you have a few injectables as well on the market.
Yeah.
So I was wondering if you are also seeing price inflation in your injectable basket.
Not really, because at least 2 to 3 injectable products, there are very less competition. So naturally, the question of price erosion doesn't arise at all.
Sandeep sir, I was asking about price inflation. I'm saying IMS data suggests that there is significant price inflation, high single digit.
That benefit we'll get.
In your generic injectables in US?
Yes, of course.
Okay. And Aditi ma'am, to you the API part.
No, so I said, I was about to say that for us API still is a very small quantum of total sale. For the next year also we expect to do external sales of about 120 CR and almost equivalent amount will be internal consumption. So to that extent, indirectly, yes, we will get hit because of higher prices of KSM. But we have now seen this kind of a thing happening over the last 2 quarters. My understanding is now prices have started to stabilize. So hopefully we will, it will not get worse from here on.
Right. And how many months of inventory of API and packing material do we keep at this point? Obviously, because prices have inflated, supply is constrained, so we must have thought of a policy to deal with that situation.
Packing material is around 1.5 months, and APIs and raw materials 2 months at least.
2 months at least. And that's across geographies, as in as a business put together?
Yes. See, mainly it's India business, the quantum which is the highest. Next comes Europe and US.
Mm-hmm. So it's 2 months across India, Europe and US.
Yes. APIs and excipients 2 months minimum inventory. Packing material 1.5 months.
Got it. And lastly, on the SRM market side, semi-regulated markets, it is our own field force in some of these markets that is promoting, or is it a contracted field force?
Yeah. In French West Africa, it is entirely our field force. In the sense, they are on the payroll of the agent, but we are funding all the costs. In Kenya, we are bearing part of the cost. In Kenya and Tanzania. Sri Lanka, again, we are funding the entire cost. Myanmar, we are funding the entire cost. So that is it.
And sir, how big for us was Myanmar? Because I understand Myanmar has been in political turmoil for the last 2 years.
Not very big. The biggest in this thing is French West Africa and Kenya. These are the biggest.
French West Africa and Kenya.
French West Africa, we did about 50 crores last year, and Kenya we did 28 crores.
Right. And our API imports, whether we do it from China or some other country, are they all billed in US dollars?
Yes.
So whatever benefit we get from US dollar depreciation by exporting to US will basically get nullified by whatever we import. Or is there a net positive exposure to the dollar?
To a small extent, Aditya.
Because our imports are very less compared to our exports.
Okay. Right. And so last question for you on the semi-regulated market currencies. So we have seen significant turmoil again in different currencies in semi-regulated markets, driven by multiple factors, inflation, and geopolitical. How are we dealing with the currencies? Are we invoicing in dollars to the SRMs, or are we invoicing in the local currency?
No, it's all in dollars. So we need not worry about the local currency.
Okay, so that the distributor at there and take care of it.
Yes.
Right. Understood, sir. This is helpful. Thank you.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Ranveer Singh from Sunidhi Securities. Please go ahead.
Thanks for taking my question. So my question relates to India business. So that 30 crore, which was COVID induced sales in FY22, so more of it was skewed towards Q2, Q3, or part of it was in Q4 also?
It was spread across several quarters. Our Q2 is typically when the season comes in. So there we did not see much of that, but definitely in quarter 1 and quarter 4, we have seen that impact come in. Specifically in the month of April, May last year, and again January. So 3 months last year we saw that impact.
Okay, so why I'm asking, because if I go by, product wise, like in ATM or that Karva Vol Plus you mentioned that was influenced by COVID. In Q4 also the run rate has been pretty decent. So was the part of it was influenced by COVID related demand?
In Q4, part of ATM specifically was definitely influenced by COVID. But across other therapies and other brands, if you've seen, we have done very well in Q4 and none of them really had the COVID push.
Okay. So in Q4, the 38.5% growth Y on Y, can you break it into volume, value and price growth?
Typically, as I said, around 6% has come from price, 2% odd from new launches, and the remaining is all volume. And not all of that volume is only COVID.
Okay. Understood. So this kind of run rate, because what you mentioned that market share may go up, that depends on how overall market grows.
Yes.
But that run rate, can we expect at least this run rate going forward to continue?
So, as I said, these specific 3 or 4 months of last year where there was a spike because of COVID, in those months it might be challenging to grow over that base. And therefore a particular quarter here or a particular quarter there would get impacted on growth. Therefore I said let us look at market share. But overall, in the longer term, that is on the full year basis or even otherwise, all our key brands, all the brands contributing to more than 90% of our India business are in pink of health, as in supported with excellent prescription growth. So I'm very confident that even if we take some headwinds of the market, the business is in great condition, and over a year it should come back to some kind of normalcy for growth.
Yeah. And second, on API side, I heard correctly you said 120 crore revenue may come in FY23?
Correct.
Against 63 crore in this year?
Yes.
So it is doubling the API revenue?
Very low because we consumed a lot internally.
Okay.
And next year we have planned accordingly. Yeah.
Okay. Thanks. That is one of my things, and all the best.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1. The next question is from the line of Cinderella Carvalho from JM Financial. Please go ahead.
Thanks for the opportunity. Aditi ma'am, how should we look at the domestic market from a growth perspective for FY23?
Cinderella, if you heard any of the AVAX or IQVI presentations of late, they are drawing various trend lines of over 24, 30 month periods, and showing that certainly by third quarter this year, the market should come to some kind of normalcy on growth. A normal growth in the years pre-COVID was around 10%. So IPM is expected to do 9 to 10% by third quarter. Before that, of course, there's going to be some upheaval, ups and downs and all those things. We are confident of doing better than the market. In fact, I'm pretty confident of doing in excess of 12%.
That's helpful, ma'am. But if we look at our growth ambitions, like, in India, apart from our core regions, you were planning to expand it to our non-core regions within India. How is that plan going ahead? And in terms of the volume coming in from the non-core regions in India, how we should expect it to pan out in FY23?
Yeah. So specifically when it comes to new launches, we are seeing a pretty uniform performance across the country, which is a good indication of work happening in the area, especially in the north, where we are relatively weaker. Other than the two acute divisions, which are more skewed in west and south, even those divisions in the east have started coming to par. But the dental and ophthal business and gynac business is pretty uniform across other regions. And so is the cardio-diabeto business. So I expect over a couple of years we will be able to get more from the weaker geographies in the north as well.
And then if we correlate, we gave a growth numbers for US and Europe segment, and with India also you just highlighted. So how should we look at our margin profile for 23? Any trajectory that you can help us, benchmark to?
So Cinderella, we are going through very challenging times right now with regard to increased prices of input materials, almost all freight. In that scenario, we feel at this stage, let's not give a very, kind of a projection for the whole year. But for the next quarter at least, we feel we'll be able to maintain the current levels of EBITDA. And hopefully by second quarter, we could do better.
That's very helpful, ma'am. Thank you so much, and all the very best.
Thank you. A reminder to the participants, anyone who wishes to ask a question may press star and 1 at this time. As there are no further questions, I now hand the conference over to the management for closing comments. Over to you.
Yeah, on behalf of the management team, I sincerely thank all the participants for a very active on call with the management team. Thank you very much. Stay safe, stay healthy. Thanks.
Thank you. Ladies and gentlemen, on behalf of Centrum Broking, that concludes this conference. We thank you all for joining us, and you may now disconnect.